The Hormuz Trigger, March 2026. The world wakes up to a shuttered Strait of Hormuz. This tiny strip of water is the jugular vein of the global economy, carrying 20% of the world's daily oil supply. If Iran closes this gate, the just-in-time global energy supply chain dies instantly. For the viewer, this isn't just geopolitics. It's the reason gas prices could double by Friday. We are moving from a surplus economy to a siege economy in a matter of hours. When the flow stops, the clock on the global financial system starts ticking towards zero. The $200 barrel reality. Oil is the base layer of everything. At $200 a barrel, inflation isn't just a percentage, it's a lifestyle killer. For America, this means the return of stagflation, high prices combined with zero growth. For Europe, it's an industrial death sentence. Logistics companies, airlines, and manufacturers face instant insolvency. We'll analyze the price floor logic once oil crosses the $150 threshold. The global consumer's discretionary income vanishes, triggering a massive, synchronized global recession that no central bank can print their way out of. The flight to the digital fortress. As missiles fly, capital flees. In 2026, the safe haven trade has changed. While gold remains the king of hard assets, we are seeing a massive surge into Bitcoin and sovereign digital currencies. Why? Because in a war zone, you can't carry gold bars across a border, but you can carry a seed phrase. We analyze the wartime liquidity shift where investors dump stocks and euros to hide in neutral digital assets that sit outside the reach of any single government sanctions. The petrodollar's last stand. For 50 years, the US dollar was backed by black gold. But as the conflict escalates, the Arab nations, Saudi Arabia, the UAE, and Qatar are forced into a corner. If the US uses the dollar as a weapon of war against Iran, the global South sees the dollar as a liability. This is the moment the Petrodollar and BRICS plus pay move from theory to reality. We are witnessing the de-dollarization of the energy market in real time. If you buy oil in something other than dollars, the American era of infinite credit officially ends. The European energy winter 2.0. Europe, as the most vulnerable player on the board, deprived of Russian gas, and now facing a cut-off of Middle Eastern oil, the euro is in a freefall. We look at the deindustrialization of Germany. When energy costs exceed profit margins, factories shut down permanently. This creates a capital flight where European billionaires move their wealth to the US and Asia, leaving behind a continent struggling to keep the lights on. It's a wealth transfer of historic proportions. Africa's bread and blood. The most tragic impact of the Iran conflict isn't in the desert. It's in the African cities. High oil prices lead to high fertilizer costs, which lead to food scarcity. We examine the food-to-fuel ratio. For emerging markets in Africa, a 100% increase in oil prices creates an immediate balance of payments crisis. When people can't afford bread, governments fall. This war in the Middle East will trigger a wave of political instability across the African continent, proving that in a globalized world, a spark in Tehran creates a fire in Lagos. The drone tech arms race. War in 2026 is a software war. We are seeing $2,000 AI-powered drones destroying $100 million naval destroyers. This isn't just a military shift. It's a massive business opportunity. We analyze the defense tech boom. Companies like Palantir and Anduril are becoming the new Magnificent Seven. For investors, the peace dividend is over. Capital is now rotating out of social media and into sovereign defense. The business of war is becoming the primary driver of the S&P 500. Israel's economic fortress. Israel is the front line. Despite the conflict, their Silicon Valley tech sector is operating underground. How does a country maintain a high-tech economy while under fire? We look at resilience finance. Israel's use of AI-4 missile defense and economic continuity provides a blueprint for the future of high-risk nations. For bankers, this is a case study in cyber-physical risk management. If your data is in the cloud, your economy can't be bombed. The Arab choice, neutrality or hegemony. Saudi Arabia and the UAE are trying to play both sides. They want US security, but Chinese trade. This conflict breaks that balance. We explore the neutrality premium, as Dubai becomes the new Zurich, a place where both Western and Eastern money hide during the war. The wealth of the Middle East is being consolidated into fortress cities. Businessmen need to understand that the middle is now the most profitable and dangerous place to be. The Fed's impossible choice. Back in Washington, the Federal Reserve is trapped. Normally, war causes inflation bad, but war also causes a recession bad. If they raise rates to stop inflation, they crush the economy. If they lower rates to save the economy, the dollar collapses. This is the endgame of central banking. We analyze fiscal dominance, where the government forces the Fed to print money to fund the war, regardless of inflation. This is the silent tax on every viewer's savings account. The War-Flation portfolio. How do you survive this? We pivot to defensive wealth. We look at the War-Flation basket: energy, defense, cybersecurity, and physical commodities. For students and entrepreneurs, the lesson is clear. In times of chaos, intrinsic value beats speculative growth. We discuss the commodity supercycle and why owning things that go vroom or boom is the only way to protect purchasing power in 2026. The new world map. As the smoke clears, the world is no longer global. It is bipolar. We have the Western digital bloc and the Eastern commodity bloc. The Iran conflict is the Iron Curtain of the 21st century. The takeaway for the world is that the era of easy globalization is dead. We are entering an era of regional resilience. Your wealth, your career, and your future depend on which side of the new digital and physical borders you stand on.